Hey guys, welcome to the channel Market Uncharted. Today we have a simple but really important video. We are going to discuss about investment risks and what ways the investor can invest in the stock market. And this knowledge is not only important to invest in stocks, but also in all the range of assets that you have available for you. So, we will be checking also this image first before addressing the topics of today because it's important to remind that high risk assets are such as options, futures, and cryptocurrencies. Low risk, we are talking about cash and cash equivalents. Everything in the below, it's important for you to get this mental image every time that you try to invest in such an asset. So let's start. Are you aware of these investing risks? First one, world risk. We live in an increasingly globalized and connected world. Financial markets everywhere could be affected by events occurring only in one country. And I will address this real quickly. We have now the instability between Russia with the United States or China with United States. This type of environment can impact badly the financial markets. You have also, for example, the well-known housing bubble in Australia that can, if it pops up, can actually affect the entire world. Then you have the stock market risk. The value of any investments can decline because of unavoidable risks in the market, systemic or unsystematic. We have seen this now with the increase of the rising yields on the US 10-year bond that has a huge impact on the growth stocks, which can also impact the other index funds. So it's important for you to understand that these are all connected. Then you have the interest rate risk. When market interest rates rise, prices or fixed rates bonds fall. So this is important that if you are trading the bond market, you need to be aware. Then you have political risk. Political issues can lead to a delay in policy implementation and future business, which can affect the market negatively. This is really important. You have this political risk now with, for example, the war against cryptocurrencies and can have an impact on the Bitcoin, for example. Then you have disaster risk. Natural disasters of any sort can lead to immense financial losses, which can affect negatively corporate profits, causing further decline. Not only disaster risks, you have also the disease risks, what happened last year with the coronavirus that hugely impact the financial markets and the world economy. Then I leave you here with a Benjamin Graham word that he says successful investing is about managing risk, not avoiding it. Then you also have to have a plan. And again, I have it here as a crypto plan, but I think it's important for every type of asset out there that you wish to trade. So we start with which currency pairs are you following? And this is important. If you are trading in which market, you need to hedge yourself with a currency pair. For example, if I have my money in dollars and I want to invest in a European stock or vice versa, I need to also be checking the euro dollar and the strength between these two currencies. Will you be trading during the volatile markets? For example, for me, it's amazing when the market crashed 10 or 15%. For me, it's a really cool buying opportunity. Most of the people feel fear at this time and take their money out of the stock exchanges. So you need to be aware if you are ready to invest in volatile moments. Which are your goals as well? When you are delaying your plan, you need to understand where are you wanting to go, how much are you willing to risk per trade. And this is an important one because when you are making your plan and you are trying to invest in a stock or ETF or cryptocurrency or a bond, it doesn't matter. It's not how much you are going to profit, but how much are you willing to lose. This is the question that you need to ask yourself. How long will you hold your trades? Are you a swing trader, a day trader, a scalper? These are all questions that you need to ask yourself to assess your risk profile. What times during the day are you trading? Again, are you a scalper or you are a swing trader? And this is important. If you not know yet the difference, check our Market Uncharted channel so you can see actually a video about the type of traders. And finally, the 12 ways to invest your money. It's really important to diversify your portfolio and understand what is out there. First, individual stocks, of course. Then you have index funds, for example, the index that tracks the S&P 500. Then you have the cryptocurrencies, Bitcoin, Ethereum, Ripple, whatever. Real estate, real estate interest funds, gold, that's important one to hedge yourself against inflation or protect yourself in a time of crash. Own your own business, collectible cards or art, per example. Your health, you need to invest in your health to be able to enjoy and invest in yourself through education. Invest in bonds for security. By the way, about bonds, be aware of this because, for example, Ray Dalio, one of the biggest investors in the world, just said that bonds are not for now a good investment. So do your own research about bonds and try to see if this match your risk profile. Then, of course, silver, belonging to the precious metals family. Again, inflation hedge against what's happening in the world, and in case of crash, good one to protect your money and preservation of wealth. So thank you guys for watching this video. Don't forget, knowledge is not power, knowledge is potential power, execution is everything, and just like the markets, we will not rest.